Hello, welcome to European Open briefing for Friday, October the 19th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. The main headline this morning is China's GDP numbers. Growth in China slowed to the lowest since 2009 in the third quarter. That initially did hurt market sentiment in Asian markets, but we did see a bit of a rebound later on as Chinese authorities pledged to provide more support to the economy. We saw a big bounce back in Chinese shares, which ended the day by between 2.5% and 3% higher. In Europe, we also have a positive, mostly positive start. We can see shares in Germany and France are only marginally higher. Yesterday, though, we did see losses on Wall Street. The dollar, though, is holding fairly steady. In fact, it's although yesterday it fell sharply against the Japanese yen, it is up by around 0.2% this morning at around 112.45. Dollar index has climbed back above the 96 level. The dollar is mostly being lifted by a weaker euro and sterling, which both currencies fell sharply yesterday. The euro is under pressure from growing concerns about a big clash between Italy and the European Union as the EU sets to reject Italy's budget plans. We're seeing the spread between Italian and German yields rise to multi-year highs. The euro currently trading around 1.1445. Sterling is a bit steadier, though yesterday it fell on disappointment that there was no deal on Brexit at the EU summit, and we could see a deal being postponed until December, and also there's a possibility of extending the transition period. So all of that means more extended period of uncertainty. So that is weighing on sterling at the moment. We also had disappointing UK retail sales numbers as well for September. But if we look at the risk-sensitive Australian dollar, it's not doing too badly this morning, up by around 0.15% at 0.7109 against the US dollar. The Canadian dollar has been under pressure this week, mainly due to lower oil prices and a broadly stronger US dollar. It's up this morning, though, by around 0.2% and 1.3052, making up for some of its recent losses, having touched a 5-week low overnight. And this comes ahead of inflation and retail sales numbers out of Canada later this morning. Looking at commodities, gold gaining some support from that fairly risk-off environment, though the risk-off has eased a little bit. Oil prices up slightly, making up for yesterday's sharp losses. The biggest performer this morning is the Kiwi dollar. No particular reason for that. At the bottom of the table, it is USD CAD. Let's now have a look at what's happening to the dollar index. We can see there's been substantial recovery in the dollar index over the past few days, rising to 1-week highs on the back of the hawkish Fed minutes, more strong data out of the US, and higher Treasury yields. And now we're seeing some renewed weakness in the euro and the pound. US stocks, though, did end the day lower yesterday. That did weigh a little bit on the US dollar. So there's those ongoing trade tensions, and which has somewhat weakened the global growth outlook. We've got expectations of more US interest rate rises, a clash between Italy and the EU, and now geopolitical tensions between the West and Saudi Arabia, as it's looking more and more likely that the missing journalist at Saudi's consulate in Turkey was killed by Saudi officials. That could potentially lead to some sanctions against Saudi Arabia by the West, and that could lead to perhaps either at least lead to higher oil prices or contribute further to that risk of an environment. Let's now move on to the euro. We can see the euro hasn't been doing too well against the US dollar over the past month or so. It's now fallen to another 1-week low of 1.1431, and we're seeing the 10-year yield on German and Italian government bonds reaching a 5.5-year high as Italy doesn't seem to be backing down on its budget plans, and the European Commission is almost certain to reject it. The European Commissioner sent a letter yesterday to the Italian Finance Minister saying that the budget was in particularly serious non-compliance of EU budget rules. In contrast, Italy's Prime Minister described the budget as beautiful. So markets are worried about the direction that this is taking, and we could see further declines in the euro in the coming days. But the Australian dollar isn't doing too badly despite that slightly disappointing GDP numbers out of China this morning. The Aussie has been seeing broad support from rising commodity prices, but in particular the ones it exports, such as iron ore. So that's why, despite that risk-off environment of the past couple of weeks, because we're seeing the Aussie has in fact been steadily climbing, earlier touching 0.7120. It did fall back a little bit as European markets opened. So China's GDP grew by 6.5% in the third quarter versus forecasts of 6.6%. So that slowdown was mainly due to the government's deleveraging efforts having a negative impact on liquidity. The trade war with the US has yet to have a notable impact on growth, although it has hit Chinese stocks rather badly, which have fallen to multi-year lows. But this morning, Chinese stocks did manage to recover after Chinese authorities said that they're going to announce more measures to support the stock market and the economy. Let's take a look at what's coming up later on today. We don't have much data in the European session, but we're going to see Canadian inflation and retail sales numbers, as well as US existing home sales in the North American session. That's it from me. Thank you very much for watching, and have a great day.